I need you guys to say some smart stuff today, okay? Um, Thank you, Rod. Good morning. What is today? Today's Thursday. Man, I'm sorry, Rob. Yeah, usually I try to get here right at 9. Sometimes I'm a little early, but I might start the room but not say anything for a couple minutes, just getting everything set up. Today's Thursday, June 20th at 8:30 a.m. We had a pretty dud, I believe was the adjective used to describe it. Um, but unemployment claims have the potential to move the market, guys. Building permits have the potential to move the market. Good morning, John C. So every morning I come to forexfactory.com/calendar and I make sure that I'm not trading into red news or orange news, just keeping myself out of what may be a reaction from somebody with more money than me. And that's the first thing I do every day, guys, is I go check news while my charts are loading and make sure that I'm not jumping in front of anything. It's a great habit to get into, and it really is. It's an advantage. Not doing it. Good morning, Adriana. Everything that I'm going to talk about, guys, comes from this Nexgen page, straight from the website. More specifically, straight from the education page, the trading guide. You guys hear me okay? Everybody but Rob? Had to turn me down. Sorry. I talk loud. My wife told me that. She's like, you talk so loud in your classroom. I don't know why. I think I just get excited. Um, As everything that we talk about's coming from the trading guide. There are no secrets with NextGen. I don't hide anything from you. I have no desire to keep you from information. Um, so any questions that you have, you'll literally be able to find the answers here. But I try to make life easier on you. I enjoy working with you guys. I enjoy getting this stuff in the room. And I enjoy speaking about the high probability trade. Guys, this is the first trade that I talk about every day because it's a trade where each indicator on every chart agrees for the rules for the trade. The way it's taught, this is a trade that typically wins 70 to 80% of the time. Guys, that win percentage brings you confidence. You begin to develop trust in what we're doing here. In this high probability trend trade, guys, it only has 3 rules. Strong triggers, clear path, no termination conditions, and then an entry. 3 advantages come from each of the rules, guys. You've got momentum, you've got a clear path, and an entry area. This is the high probability trend trade, guys. This is the best of the best. And we don't look at it for an entire hour and a half every morning because I'm trying to shackle you to one trade, because I'm trying to hold you back in your trading and keep you from being wealthy. The reason I do it is because this is the trade that teaches you to read your charts. Guys, you've got to be able to look at your charts and decide whether or not those advantages are present, because it's those advantages, it's your chart read that lets you know that your rules are met. And once you get good at it, you're going to realize that about 90% of your day, guys, is spent reading indicators. 90% of your day is sitting on your hands not doing a darn thing. The other 10% of the day is taking trades because your rules are met. Your chart reading, once you get good at it, you will understand where the market is likely to continue. You're going to understand where it's likely to go, and you will very much understand where it's likely to stop. And you're going to use your chart reading to make sure that your rules are met. Again, only 3 rules. Momentum, a clear path, and an entry area. These are the advantages that come from the rules. Once you get good at momentum and a clear path, guys, you're going to find more entries. You're going to see more opportunities in the market. Excuse me. These 3 rules happen on only 2 charts. Avoid the temptation to start throwing extra charts at yourself. Avoid the temptation to start adding indicators, to changing what NextGen has provided. My brother has spent 27 years teaching people to day trade, teaching people to read indicators, and guys, we have, honest to goodness, broken this down to the easiest possible way. I was laughing because I saw an interview with Elon Musk, and he goes, man, engineers try to optimize things that shouldn't even exist. And I think day traders are the exact same way. Day traders are convinced that if they take something that's solid, that's easy to do, and they make it more complex, well, then it's got to be more efficient. And that's just not the truth with day trading, guys. So we're going to look at 3 rules on 2 charts. We're going to use a large chart and a small chart. We're going to have a broad stroke of a brush here in the large chart. It is going to define the direction of the market. It is going to let you know if you have the advantage of momentum through rule number 1. And it's going to let you know if you've reached a termination condition through rule number 2. All of this information is going to happen in one bar on the large chart. It'll be the most current bar on the large chart. Once your rules are met, hey, good morning, Erla. Once your rules are met, you're going to refine this one bar into 15 to 30 bars. You're going to take an X-ray of that very broad stroke of a brush, and you will be able to pinpoint where the market is most likely to continue. And this becomes your entry for the highest probability trend trade. This is rule number 3. It happens on a smaller, faster chart. You'll also be able to manage trades using this smaller, faster chart. So we're going to take a whole hour, at least, and we're going to talk about the rules for when it's okay to trade. We are going to discuss those 3 rules for the high probability trend trade. I'm going to encourage you guys to think in terms of advantages, not in terms of trades. Do I have momentum? Is the path clear? If so, let me look for an entry. And if you always speak in these first 2 terms, if you always say, do I have momentum? Do I have a clear path? Then your entries are more likely to be effective. So we're going to talk about the rules. You guys simulate, practice, make some mistakes. But the thing is, post them in the room. When you take a trade, put it in the room. When you see a chart read, put it in the room. Hey, Zorro, good morning. When you have a question, put it in the room. Room participation is the most important thing that you can do. And guys, this is really how you're going to become confident as soon as possible, by posting your trades in the room. And we have a discussion, a little one-on-one, but I've got to share something with you here. Every time you post in the room, I want you to write on your chart. I want you to discuss momentum, and I want you to discuss areas. Guys, I went back through probably 50 charts over the last, I don't know, day or 2, and almost every loser was void of those 2 concepts. Almost every loser presented in the room, the trader refused to talk about momentum, and they couldn't identify a clear path. And I'm telling you guys, one of these was the reason for the loser almost every time. So when you post in the room, when you're taking a trade, use those words. Do I have momentum? If you do, write it on the chart. If you don't, write it on the chart, because sometimes just knowing what you're getting into is going to help you manage trades. So talk about your advantages on the large chart, identify your entry, and then most importantly, guys, tell me why. Why did you get in where you got in? What was your criteria for entry? Because the whole point of posting in the room is to get feedback, right? The whole point of the room is for us to look at your charts and say, yes, this is the correct chart read. Yes, your entry is the lowest risk entry. Yes, your exit makes the most sense. And if you hold this information from me, guys, if you hide trades from me, you're not going to get to where you want to be as quick as you want to get there. The goal is that you practice the correct rules. It's fun to jack around on sim, right? It's just pretend money. Who cares? You're building muscle memory. From day one, you're building muscle memory. And any bad habits that you create on simulator are going to follow you when you finally go live. So learn the rules. We're going to do that together. Simulate your trades. You're going to do that all day, and you're going to present in the room. And then, guys, every time you take a trade, drop it in the spreadsheet. I give this spreadsheet to the classroom every day, and there's 4 tabs. The first tab is your trade tracking. Every time you take a trade, every annotated chart, it goes into this room. Your job is to come back tomorrow and study what you did, to see what worked and what didn't work, to recognize patterns that are bringing you success, and to identify things that might be taking that success from you. There's an entire notes section so that you can put any feedback that you received in the classroom right there. If you study this chart every morning, asking yourself, what did I do yesterday? What do I want to do today? It's going to set you up. It's going to accelerate the learning. The 101 tab is the 3 rules for the high probability trend trade, and also sections, pictures for when it's not met. Your job is to fill out this section with study. As you develop recognition, you're going to create your own trading plan. I will give you a trading plan this morning. But you're going to build your own because you're going to become a chart reader. And when you're a chart reader, John Novak, don't you post a picture in this room. When you're a chart reader, you're going to see a lot more opportunities. You're going to see different entries. You're going to see different ways to manage trades. So you're going to fill out this section to make sure that you're developing a trade plan that suits your needs. And then finally, the last page is about 350 pictures of you guys being brilliant. I steal these from the classroom. This is Nexgen users taking those advantages and finding ways to make money with it. The high probability entry for a short, for a long, how to manage it. Back to work, John. Patterns that repeat themselves. If you want to be a NASDAQ trader, there's a whole section dedicated to it. And also termination conditions. Reasons not to trade into the market. So guys, the path is pretty simple. It's been consistent for years. If you post your trades in the room every time you take a trade, if you ask a question every time you have a question, you're going to get to where you want to be faster. If you use the spreadsheet, if you come back, if you study it every morning and set yourself up for the day, you're going to become a confident trader faster. And then simplify. Keep it easy, guys. Don't complicate things. We're going to look at a high probability trend trade. We're going to focus on it for almost an hour, breaking down each rule so that you can see it visually. I'm going to teach you how to study it. You have to know what looks you'll commit to. That's where the picture taking comes in. When the market isn't moving, it's not scary. When the market isn't moving, it's easy to talk through your rules. And when you see the market not moving, your rules met over and over, what happens is when the market is moving, when you go to simulate those trades, it's almost as if it slows down because you know exactly what you're looking at to take a trade. And that's your path, and the path has been consistent for years and years and years. So let's get to work. I'm going to encourage you guys, if you have questions, ask questions. Don't hold back. Don't worry about monopolizing class time. Don't worry about asking too many questions. Don't worry about asking the wrong questions. There are no wrong questions. Each and every time you guys ask, what happens is the classroom gets better. Every time you ask a question, something that's in your head, the classroom gets better because I'm forced to think of a different way to say it to make sure that everybody is on board. So you literally are an integral part of the education process through participation. Don't sell it short, guys. Don't worry about it. Be stingy with the time in the classroom. It is your time. 3 rules. Strong triggers on a large chart. No termination conditions on a large chart. Find an entry on the small chart, guys. These are the advantages that get you into a trade. Your ability to read your charts will identify these advantages. And the first one is strong triggers. And the only way that I can have strong triggers is to be trading with the trend. If the background is green on my large chart, the market's going up. In order to have strong triggers when the market is going up, both my small triggers and my large triggers must be green. All of the colors have to match. And then when my small triggers are up and above the large triggers, and the large triggers are widening, and there's the space between the two, I want you to picture scissors opening up. When your scissors open up, ladies and gentlemen, you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue up. You're going to hear odds favorable momentum in the classroom all day long. Did you have odds favorable momentum? You're going to see it on charts, OFM. In a downtrend, when the small triggers are below the large, everything is red, the space is there, the odds are favorable for the market to continue down. Once again, odds favorable momentum. I love the words. Scissors are open, and you've got an opportunity to take a high probability trend trade all the way until the scissors close, because when the scissors close, the momentum goes away. When you have strong triggers up or down, you'll use that smaller, faster chart to buy Fibonacci support in an uptrend, to sell Fibonacci resistance in a downtrend. On your large chart, it's going to look like a tail or a wick, and you're going to be able to go back historically and study these tails and see if they line up with the entry rules being met, and this is going to become a way to create trust in the methodology. But strong triggers, this is rule number 1 being met. When the scissors close, weak triggers, smalls inside of the large, anything can happen up or down. The language becomes very important here. Anything can happen up or down. Your advantage is gone. So as a brand new user, Strong triggers leads the way, guys. Strong triggers is when you're going to look to sell Fibonacci resistance in this downtrend. Strong triggers is the absolute best of the best. It's going to push that market. Strong triggers can break key Fibonacci areas. Strong triggers can also cover some of the mistakes that you guys like to make as new users. As the scissors close, as the triggers begin to come together, when you become a chart reader, you still may find some opportunities with one line inside of the large, and then that's when you're going to use your chart reading to make sure that all the charts agree, and you'll be able to manage a little more aggressively. But when those small triggers work their way inside of the large, guys, it's okay to just say to yourself, hell, I don't have the advantage. I'm done. I don't have anything that's likely to push anymore. I'm going to sit on my hands and do nothing. Or you may come up with a plan through chart reading and aggressive management to still find opportunities. As a brand new user, anything can happen, kills a lot of trades. It kills even more trades when I have those weak triggers going into an area, into one of those key Fibonacci areas. So let's go to a large chart real quick and let's just see if we can identify some odds favorable momentum. Small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. Can everybody in the room give me a Y? Especially my new users. This is odds favorable momentum to the downside. This is the best of the best time, guys, to sell Fibonacci resistance. And we'll come back and see what that tail looks like. In an uptrend, small's above the large. The space is open. The scissors are wide. This is the best of the best look to buy Fibonacci support on a smaller, faster chart, guys. Go back and look at this. I love that 2 out of 35 people, 2 people that have been with me for months, say, absolutely, I recognize momentum. How about you newer folks, you guys that want to learn to be day traders? Talk to me. Let me know that you're good. Odds favorable momentum on the most current bar. Smalls above the large. There is space between the two. My scissors are open. Guys, the market is likely to continue in the direction of the trend, and you're watching it continue live right now. This is your first advantage. Your second advantage is going to be making sure that you don't trade into an area. Your second advantage says don't trade into termination conditions. Don't trade into areas likely to stop the market. Because when you have no termination conditions, you have room to your profit targets. And when you have room to your profit targets, guys, you have the advantage of a clear path. Terminations, once again, large chart. Rule number 2 is coming from the large chart. A termination is nothing more than a Fibonacci-based indicator that may reverse the market, guys. And this is going to be based on a comparison between the trigger lines, the exact same trigger lines that create momentum, in the areas on a large chart. The areas that we're looking for, lines on a large chart, guys. We're looking for red resistance, blue support. Whoops, I just opened up my email. We're looking for these yellow 1-to-1s, divergence high lines, and divergence low lines, guys. These lines on a large chart may terminate the trend. One second, guys. Alright guys, so these lines can cause trouble. The large chart lines can create problems. This is where the people in charge, the people that move the market, are making decisions, guys. These are where fights happen. These are where the buyers buy and the sellers sell and profits are taken. And everyone in this room knows about them before we ever get to them. And then we're going to use the trigger lines, and we're going to let the trigger lines are going to let us know if they're likely to stop the market. We call that a termination condition. Rule number 2 is not met. We're going to let the trigger lines tell us if they have the potential to break, and we're going to let the trigger lines tell us if they have broken, guys. These are decision-making areas. These are where fights happen. These are the people that are moving the market, the large crowd. The same people that create trends, the same people that establish momentum are going to make some pretty key decisions right at these areas. So your job is to not trade into them. Your job is to be able to recognize when they're a problem. There you go. I know, Jen, how sad that must be to not hear my voice. Oh, I couldn't even imagine. I talk to myself in the mirror all day long. Hey, Chris H., good to see you, man. So let's talk about when areas can stop the market. Let's talk about when they have the potential to break. And let's talk about when they're already broken. We don't have to worry about them anymore. So the first thing that happens is price reaches an area. And guys, I say this because if decisions are made at key areas, right? If decisions are made at a key area, well, then we want price to reach that area. We want price to come down and hit an area, set off that decision-making process. And the trigger lines are going to tell us where we're at in the process, guys. So initially, when price reaches a line and the triggers remain above an area of support, that area is a termination condition. In the moment, that area has the potential to stop the market. That's an area that I'm not willing to trade into, because I don't know what the reaction is going to be by the people that run the market. I don't know if they're going to reverse the market. I don't know if there's going to be an untradeable bounce, and I have absolutely no idea if it's going to break. So right here, when price reaches an area, the triggers remain above support, or in the case of resistance, if price reaches an area and the triggers remain below resistance, I'm going to sit on my hands and do nothing, guys. And this really is... this is a giant red flag saying, be patient, let's see what happens. And most trades are lost by new users trading directly into areas. Well, areas break all the time, especially with momentum. So if my small triggers smash, and I want everybody to pay close attention to this, my small triggers have to rail through that area, points through that area, not peeking through the area, and I have odds favorable momentum, well, then this area has the potential to break because of that momentum, but it's still not a clear path. It's only potential, right? It's that thing we all had in high school that our parents couldn't believe we were squandering. It's just potential. It's not until both the small and the large triggers get to the other side of the area. Now the area is broken. Now the path is clear. Now it's time to look for momentum in one of those entries. So termination conditions are going to happen at highs. Termination conditions are going to happen at lows. Trading into termination conditions is one of the biggest rule-breaking moments in a new user's life. So let's look at them at a high real quick. When price reaches an area, and I want to talk about this. If price goes up and comes down, right about the third bar, if there was a loss of momentum, you're going to see a magenta line print from that high pivot. That's a loss of momentum. That's called divergence. Divergence is not a termination condition. Hey, Jonathan, just give me one shot, right? Give me the trade start to finish. Give me your annotations. That way I don't have to click on the same trade 18 times. It'll make it easier for both of us because I don't have to chase your trades through the chat box to keep up with every move. So rock it out, work it to completion, and then show me that final trade. Give me some great annotations. It'll make it easier for you to go back and study tomorrow as well. Price goes up, price comes down. If there's a loss of momentum, guys, you're going to see that magenta line. Price does not reach this magenta line. Price actually creates this magenta line. But when price comes back and reaches a magenta line and the triggers remain below, it's a termination condition. If price trades above it and back below, it's what we call a pivot stop out. This is your pivot. This is your pivot stop out. This is powerful. It's even more powerful when it happens near fibs. If price reaches resistance, triggers remain below, even with odds favorable momentum. This is the termination condition. No long trades into this area. The same is true at 1-to-1s. And what can happen at a high, of course, can happen at a low, right? So let's look at a couple at lows. It's the exact same recipe. The recipe absolutely, positively never changes. Price reaches the area where are my triggers. If they're above support, this is an area that may stop the market, that may create a fight, that might reverse. I don't know. So I choose not to trade into it because I no longer have a clear path. Rule number 2 is not met. You see it again at Fibonacci support. And then there's one of those pivots that is not a termination condition, but when price reaches it, triggers remain above, you end up with one of those pivot stop outs, and sure enough, it reverses the market, guys. Rule number 2, the most broken rule by new users. Let it be either broken or not in the beginning, guys, and what'll happen is you'll find a way through chart reading to take advantage when the potential is there. So let's go to my favorite picture ever. 90% of your day is spent sitting on your hands waiting for advantages. But I'll tell you what, before we do that, let's open up a large chart again. Most current bar reached Fibonacci resistance. Guys, where are my trigger lines? Are they below the area? If they are, absolutely no short trades. Price reached resistance, the triggers remain below. Look at the big untradeable bounce. Price reached resistance, triggers didn't break. Look at the big untradeable bounce. Does everybody see it? How do I learn to trust termination conditions? I scroll back. I take pictures. Any long trade I took here would have been stopped out. Any long trade that I took here would have been stopped out, guys. Directly into a divergence high. Directly into support. So what happens is rule number 2 keeps you from trading into these decision-making points. Weak triggers keeps you from trying that last short. Rules are designed to give you a statistical advantage. And I'm telling you, if you let it be simple, life gets pretty easy, guys. Price reaches 1-to-1s, triggers remain above, no short trades. Is everybody good with that? Give me a Y in the room, please. If you're comfortable with the idea that when price reaches, triggers remain above support, below resistance, let's sit on our hands and do nothing. Let's wait and see what the people in charge want to have happen. Fights happen at fibs, guys. From these 1-to-1s, check it out, to resistance, triggers below. Can't go long. Trigger lines don't match. Can't go short. Can't go long. Can't go short. Price reaches a mid-band. Large triggers are a full bar away. Guys, this is what we call the gap theory. I'm going to give you a picture of it, and I'm going to talk about this real quick. The gap theory is not a trade setup. The gap theory is not looking for an entry. The gap theory is nothing more than identifying that if price accelerates away from these large triggers really fast and hits an area, fibs, mid bands, 1-to-1s, divergence highs, divergence lows, it's likely to close the gap back to the large triggers, guys. These moving averages, price comes back to them all day long. And when they accelerate to an extreme and they hit an area, they're likely to close the gap. This is what makes mid-bands termination conditions. It doesn't mean go short because it's the gap theory. It means don't try the long yet because it's likely to close the gap. You can identify it on your large chart. You have this wider gold bar. This is what we call a reversal bar marker. If the market accelerates up and your large triggers are below that reversal bar marker, any long trades in between the two are pretty much doomed. It acts like a vacuum. If you close your eyes and listen, you can hear the sucking noise. And what happens is that gap theory, price accelerates down, hits a mid-band, closes the gap. If you were thinking that you wanted a short, if you thought you were going to break rules into termination conditions, guys, it just stopped you out. So it's not a trade. What it is it's a don't go yet. It's not time yet. Let's let the market sort itself out. Guys, this is about 45 minutes to an hour of rules not met. This is about 45 minutes of consolidation. This is about 45 minutes of not having advantages. And then eventually, hey Keith S., welcome to the room, man. Eventually, all your triggers get above resistance. It's broken. Do you D? We'll do some. Eventually you get momentum, and there's one of those tails, guys, pinpointing where the market is most likely to continue. So let's go to the large chart. And guys, this is exactly how the classroom works. If you raise your hand and you say, you know what, Mark, I have a question, let's answer it. Let's do it. Let me scroll back and find a good example for you, D. Dun, dun, dun. Tighten it up a little bit. If I remember right, crude oil didn't have a lot. We looked for them yesterday. Sometimes it happens, sometimes it doesn't. Here's one. Whoa, and I just messed it up. My bad. That's okay. Price pulls all the way back to resistance, D. See how the large triggers are way down here? All this says is don't go long just because the background's green. Price reaches the mid band, large triggers are full bar away. So go back and look for this pattern. And what's cool, I'm going to show you a neat trick. If I take everything but trigger lines off of the chart, I'm going to do that right now. This is how I studied the gap theory. This is how I got good at the gap theory. I took everything off except trigger lines. Let me do that real quick and apply it. I right-clicked on the chart and I went to indicators. And then once I got to indicators, I removed everything but the trigger lines. So watch, when this comes back up, all I'm going to have is trigger lines. Guys, this is a great way. This is a great way to study momentum. Look at that. Odds favorable, there's a tail, right? Odds favorable. What a great way to study momentum. But check it out, D. See how it accelerates away and pulls back? I bet you there's either a fib or a mid-band there. It sucks right back. Here it sucks back with odds favorable momentum to create a trade to the upside. Guarantee there was a mid-band or a fib there. See how the large triggers didn't follow? And it sucks right back to them? It does it again right here. You'll get to a point, let me put a big circle on it. Dollars to donuts. Whoa, what did I do? Holy smokes. My bad. I stretched that out a little bit. Let me fix that. I'm not sure how I did that, but I certainly did it. So check it out, D. I'm going to circle this right here. This is at 4:14, June 13th. Oh, that's back there a little bit. And I'm going to put my indicators back on. I'm going to reload my template. And I want you guys to see. I bet you a shiny nickel, guys. The June 13th, 4:45 in the morning, there was probably a mid-band there. There was probably a fib there. There was something that price reached that created that bounce back to the large triggers. This is one of the easiest ways to study that gap theory, to learn to believe that it does in fact happen and that it very much takes away your advantage. So while those indicators come up, oh, well, that was pretty quick, wasn't it? Let me scroll back. June 13th. We really went back a little bit, didn't we? That's okay. So I'm going to scroll back one more time. Let's find that circle. There it is right there. Right off of the mid-band. Isn't that awesome? What a great pattern. Same thing here. Right off of fibs. And it goes right back. Same thing here. Guys, you never have to get caught out on this one again. Go back and study it a little bit. And if you look at that spreadsheet that I gave you, under patterns that repeat themselves, there's about 20 pictures of the gap theory to help you with your study. So, 90% of your day is doing nothing, guys. 10% is going full-blown rock star when the rules are met, when the advantages are present, making sure that you have momentum, that there's nothing in the way, and then using that smaller chart to pinpoint where your entries are. So, once again, is everybody cool? Lines on the large chart are where decisions are made. Lines on the large chart can stop it cold. Lines on the large chart. Guys, we still have not gotten above this line. Price reached it. Look at that giant bar that came off of it. It's still working. This takes away your clear path, guys. Sometimes price doesn't hit a line. Hey, good morning, Chef. Sometimes price turns from the middle of nowhere. Sometimes price even has odds favorable momentum, a clear path, and the darn thing drops. I'm going to give you one more termination condition, guys, one time, where I'm going to use a small chart to determine that rule number 2 isn't met. And this uses that idea of divergence. 3 losses of momentum, 3 divergences in the same price range may terminate the trend. 3 cyan lines, light blue lines from a low, 3 magenta lines from a high This may terminate the trend. This is 3 losses of momentum on a smaller, faster chart right in the same spot. This is your entry chart. This is the only termination condition on an entry chart. This is the only time on a small chart where I will say, dag nabbit, I don't have a clear path. 3 losses of momentum may terminate the trend. It becomes more powerful when those small triggers work their way inside of the large triggers. I get that anything can happen look. And it becomes even more powerful still if it creates a little head and shoulders. If that final pivot is higher than the low or lower than the high. Guys, this right here, if I'm looking at my large chart and my large chart says I have momentum and my large chart says that I haven't reached the area, and I turn my attention to look for an entry and there's 3 divergences, I have to abort. I can't take that trade. That is no longer a clear path, and I lose the advantage. So you're going to see this at a low and this at a high when that big broad stroke of a brush can't give you the information fast enough. And guys, that's termination conditions. Making sure you have a clear path, coupling it with a momentum. If you start talking to yourself every day about momentum and a clear path, and you're going to see it as we go through and review charts today. You're going to see how many times writing these words on the chart would have kept you out of a losing trade. You're going to see how many times writing those 2 words on a chart would let you know if you're getting into a trade that isn't the optimum scenario. But once we have them, guys, once we're good, let's find an entry. Let's start taking our piece of the pie. Let's make sure that we can enter the market is most likely to continue. And we're going to do that on a smaller, faster chart, the refinement chart. And rule number 3 says that we're going to use a limit order to buy or sell a pullback. And a pullback is a small little fluctuation in price, guys. If the large chart says up, if the large chart says clear path, if the large chart has momentum, there's these jackholes over here that love to fight it. They got a lot of money, but not enough money. And they will literally lose their fight 70 to 80% of the time, which is why we can win our fight 70 to 80% of the time. They'll give it a little shove, a pullback, a retracement, counter to the underlying trend. And here's the deal. We're going to take advantage of it. This is where your entry comes from, guys. From an area, fibs, midbands, yellow 1-to-1s, inside of triggers. And that will become the point where you're going to activate a limit order. You're literally going to wait for the market to come to you, and you will enter the highest probability trend trade. So when the large chart says up, when the large chart has a clear path, I had a manager a long time ago, Ron. He used to use that word, but he used it in the most Texas twang you've ever heard, and it painted a picture. When the large chart rules are met, right where my laser pointer is, guys, that is where we're making the decision that it's time to enter a trade. And a lot of you are going to say to yourselves, we've already missed it, Mark. We've missed the move. Why are we waiting for it to get so far away from areas? Because fights happen at areas and we don't want to be in the fight. Mark, why didn't we trade down here? Because we don't trade in determination conditions. So when the market's up here, when the momentum is strong, when the path is clear, we're going to let the small crowd do their thing, guys. And they do. They show up every day to fight the large crowd. And we're not going to trade these tails. I said that you'll be able to use these for study. We're going to let these guys push the market back to areas, fibs, midbands, yellow 1-to-1s, and we're going to insist that those areas are inside of trigger lines. Because remember how we said price likes to come back to the large triggers? Did everybody get that lesson from the gap theory? Price loves to return to triggers. Price loves to come back to the large triggers, so much so that it becomes a little predictable. Well, these large triggers on the large chart become the correction point when that retracement starts. And the large triggers on the small chart become the correction point when that retracement starts. So if we stack those 2 large triggers, if we take the large chart large triggers and the small chart large triggers, and they're overlapping one on top of the other like 2 snakes riding piggyback, hand over hand, guys, what it does is it takes both correction points and puts them in the exact same price range. And then when we put an area inside of that correction point, fibs, midbands, yellow 1-to-1s, it gives the market something to bounce off of. So I expect price to return to triggers, But I'm hoping that price bounces off of areas. Triggers are not my entry. Areas inside of triggers are where the entry happens. And guys, the further apart those correction points are, the less accuracy you have, the more risk you're going to have on trades. There's a lot of indecision that comes from what we call split triggers. So when they're overlapping, we're going to call them favorable large triggers. So we are going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That is the best of the best scenario for the brand new user. So how do we determine where the market's going to continue? First, we let the rules get met on the large chart. It's imperative that you have momentum. It should be undeniable that you have a clear path. And when that happens, let's wait for the fight, guys. And it begins with a reversal bar. This reversal bar says the small crowd is angry at the large crowd and they're gonna put their dukes up. We don't enter on the reversal bar. The reversal bar is not the entry for the highest probability trend trade. At the time of the reversal bar, you're gonna put a big box or circle around those trigger lines. And you're gonna say to yourself, I need the large triggers and the synthetic triggers overlapping one on top of the other because my life trading revolves around advantages and this gives me the biggest advantage. And you're gonna say to yourself, when price reaches that correction point, it's not my entry. I don't expect trigger lines to create a bounce. I need areas inside of triggers. So we're gonna create the window of opportunity. Pretty clever, right? Call it the woo if you're a Ric Flair fan. Just go woo from the highest point of support. In this case, it happens to be a midband. From the lowest point of support. In this case, it happens to be yellow 1-to-1s. This blue box represents where the market is most likely to continue. It's not one tick wide, guys. We're good. We're not always that good. So we create a window. This is where I expect to bounce. But because the large chart is flying to the upside, because the large chart doesn't have anything in the way, I'm going to activate a limit order a tick or two above that highest point of support, and this becomes the entry for the highest probability trend trade. Is everybody good with that? Reversal bar is not my entry. Contact with the triggers is not my entry. 2 ticks above the highest point of support for a long trade, 2 ticks below the lowest point of resistance for a short trade. This is where the market is most likely to continue. This is where my advantage happens. This is where the least amount of risk comes into play. Your window of opportunity insists that areas are inside of triggers. So if you have a fib hanging on the other side of those trigger lines beyond the correction point, it is not a part of the window. If you have 3 fibs and yellow 1-to-1s and they're on the wrong side of those trigger lines, these are not in your window, guys. By then, you've exceeded the correction point. You've blown through the areas that are inside of the correction point. You no longer want to be in that trade, which means that that's exactly where your first stop is going to go, where your protective stop will be placed, right where the market shouldn't go. And if the small crowd is able to push beyond all of those things that are anticipated to create a bounce down, you're going to get out of that trade. And guess what? You're going to lose. And it's okay. You will lose trades, guys. Lost trades happen every day. The key is that you lose the correct ones, that you lose the ones with all the advantages, that you lose the trades that are more likely to win than lose. And it's just a cost of doing business. So your initial stop will go where the market shouldn't. But the cool thing is, with all those advantages in place, you're likely to get a reversal bar in the direction of your trade. And you'll be able to reduce your risk. 2 ticks above it, 2 ticks below it. And guys, it is not at all uncommon to see Nexgen users taking the perfect trades that fail and only losing 20, 30 bucks a contract on them because of the accuracy of the entry. And once again, we don't trade tails. Where are those tails? But if I circle the tail historically and it lines up with support inside of favorable large triggers, guess what, guys? That's a high probability trend trade. You should take a picture of it. You should annotate it with the advantages. And you should drop it into your spreadsheet and say, this is the one that I never want to miss. Let's see if we, oh my gosh, holy termination conditions. So let's take this circle. And this is just a potential to break circle. Where did it go? It's not even 100% clear path. But let's see if the pattern holds true, guys. Let's see if there was a pullback to resistance inside of favorable large triggers. Bum, bum, bum. That was in the middle of the night, so I don't know. There it goes. There's my reversal bar. There's area inside of favorable large triggers. Holy shnikes, there's my winner. Did you guys see that? At the time of the reversal bar, I identify, let's do this. Let's do this together. I can identify from the bottom of my triggers. Look at this. They're all the way down here. That's why we don't trade off of the triggers. To the top of my triggers. That's a pretty big correction point. Would everybody agree? Let's make this look like it looks in the live market. Odds favorable, momentum potential to break. At the time of the reversal bar, I'm going to draw a box from my lowest point of resistance to my highest point of resistance inside of trigger lines. Is everybody with me so far? Brand new users, we are identifying how to pinpoint an entry. I'm going to right click. Oh, price is on the wrong side, so I'll have to use a line. I'm going to right click and I'm going to put an entry 2 ticks below that resistance inside of favorable large triggers. And then everything is out of my hands. The market's going to retrace and I'm going to get nervous and the market's going to come up and I'm going to want to jump in, but I haven't reached my spot yet. And then it reaches it and now I'm in a short trade. Guys, now you're in a trade with the highest chance of winning. And your initial stop has to go where the market shouldn't, outside of that correction point. And the market continues up. The small crowd's got some gas today. And they go up again, and now we're getting nervous. But I'm still in the window, right? Let's pull that window over. I'm still in the window. I'm still where the market's most likely to continue. And it continues up, and it continues up, and my adrenaline is pumping, and my heart is racing, and my palms are sweaty, and all I'm doing is reminding myself that my rules are still met. I'm still inside of the correction point. I still have bounce spots. And it goes up and up and up, and whew, it finally goes down. And now the market is trading with momentum, and now the market is trading with that potential to break, and now it's bouncing right off of that area inside of triggers, and I'm going to reduce my risk 2 ticks above it. And I've got 10 ticks of risk on this particular trade, guys. And it's down, and I don't care about fluctuations on a small chart. Isn't that pretty cool? Guys, this is the same look that happens every day. This is the same look that happens on every market. And let's put this box right at the top of that pullback, right at the tip of the tail. So you can study this. You can go back on a large chart and you can find these tails. Let me get rid of all my lines. You can find these tails, scroll back on the small chart, and let's see what the circle looked like. Whoops. It looked like a pullback to support right inside of a trigger, didn't it, guys? This is your pattern. This is your first 30 days. Once you can pinpoint where the market is most likely to continue, guys, life begins to get easy. But you've got to be good with a couple concepts. And I'm going to start giving you the gifts of the morning, guys. The first one is the 101 drill. I can teach you how to get to where you want to be fast. I can teach you how to become a chart reader inside of a week. This is it right here. So you can either choose to do it or not. It doesn't affect my trading one bit, guys. But to get to where you want to be, you have to be able to recognize these looks in a moment. You have to be able to recognize momentum. You have to understand a clear path. You have to be able to recognize your entries, guys. You have to know the difference between strength and weakness. You have to understand the difference between a clear path and a termination condition. And guys, this is where that 101 section pays dividends. I've already given you 37 pictures of strong triggers. Create 25 of your own. We've got 16 weak, we've got 15 clear path, hanging out at 32 pictures of termination conditions. We've got that 50-50 look, that potential to break look, and an awful lot of entries, guys. If you go through and you take these pictures, if you spend 5 or 6 hours of your life to become a chart reader, it's going to be difficult to ever get caught in weak triggers and termination conditions. But you can't just take pictures, guys. You got to talk about the whys. Why is it strong triggers? Because the smalls are above the large, because the space is created, the scissors are open. What does it mean to me? It means that I have the advantage of momentum. Let's look at one just for grins. Here's strong triggers straight from the spreadsheet, guys. I have strong triggers. The smalls are above the large. All the triggers are up. The space lets me know they are strong. I have the advantage of momentum. Rule 1 met. If you go back and take 25 pictures of this, guys, you're never going to mistake strong triggers for weak, wonky triggers. You're never going to mistake strong triggers for anything can happen triggers. So this is your drill. Talk about it. Why is it an advantage? What rule does it go to? And I'm telling you, you won't get caught wishing that you had strong triggers when they're weak. And you're going to piece these looks together to create a trade. So I'm going to drop that one in the room. I'm also going to give you guys a printable high probability trend trade checklist, guys. So as you begin to study and go look for this high probability trend trade, these are the rules that I want to see written on your chart, guys. I want you to talk about whether the market's coming from a good top or bottom. And I'm going to say this one. There is a strong top or bottom. There is a weak top or bottom. There is a good top or bottom. There's a bad top or bottom. A good top or bottom is a termination that reverses the market, that had absolutely no triggers break through. There's not an okay top or bottom. There's not a soft. There's not a top or bottom. You either have a strong top or a weak top. Let's change that. Let's change good to strong. Let's give it the credit that it needs. There's either a strong top or there's not. There's either a strong bottom or there's not, guys. There's no in between. A strong top or bottom means that you had a no triggers through reversal that changed the direction of the market. The decisions were made by the people in charge that were so strong that they reversed the entire movement of the market. This sets you up for the highest probability trend trade that you can take. It's not mandatory, but it certainly does increase the likelihood. You have to have odds favorable momentum on both charts. No terminations. And then, guys, use the language, areas inside of favorable large triggers. You'll be able to print this one out, put it on your desktop, and start policing yourself. You'll never have to ask me if it was a good trade. Good trades have rules met. You'll know exactly what your rules are. And I'm going to give you this one because you're going to know exactly what your rules look like when they're met. Because here is a strong top or bottom. What is it? It's a termination with no triggers through that reverses the market. This reversal can never be a strong bottom because it wasn't a termination condition first. This reversal can never be a strong top because it wasn't a termination condition first. Here's your trigger strength. Here's your weakness. No triggers, no trade. Potential to break. Area broken. Guys, you should never confuse it if you go back and take these pictures. There's your window of opportunity for first. For shorts, for longs. So what you have is you have the ability to study. You have an understanding of what it looks like to have your rules met. You're going to do the work to make sure that you never miss that look. All of this is in the room. I just dropped it in the chat box along with my spreadsheet that has done a tremendous amount of the work for you. I need you to add on to that. And now this is where the good stuff happens, guys. I'm going to give you the KISS plan. The Keep It Simple Sunshine Plan. The plan that is designed to optimize your chances of success with a high probability trend trade. I give this out every day, guys. If you are struggling with consistency, if you find yourself chasing trades instead of following rules, if you're trading your read instead of your rules, guys, this KISS plan is designed to reel you back in. And I've had people get funded in those prop firms within their first 30 days by following the KISS plan. Chef, were you one of those people back when you started? I thought that you were one of them. Within the first 30 days with Nexgen, was able to fund an account using the KISS plan. Guys, this is a stepping stone. All this is designed to teach you to read your indicators. All this is designed to keep you focused on advantages. Everything about this is designed to give you a plan that's profitable while you become a better chart reader. Everybody seems to ignore it, and I don't know why. This one optimizes your chances. But through simulation, study, class feedback, and continuous practice, guys, you're going to be empowered to craft a plan suited, tailored to your personal goals based on your experience reading the indicators. Guys, that's an AI fancy way of saying that when you're a chart reader, you're going to see opportunities. When you're a chart reader, you're going to find more entries. When you're a chart reader, doors are going to open. But until you're a chart reader, why not? Until you're profitable every day, why not? Keep it simple, keep it focused, give yourself the best of the best. So this defines your entry. And the simple plan for consistency, guys, don't fight large chart momentum. Don't fight large chart areas. Don't trade into those termination conditions. Make sure that you can answer yes to each and every one of these, and then learn to trust and take that trade. This is a trade that typically wins 70 to 80% of the time. And guys, great entries, and that's exactly what we've defined here. Great entries create manageable trades. Management, for whatever reason, is terrifying to us in the beginning because now we have something to lose. Guys, finding an entry, I've got nothing to lose. When I'm not in that trade, I've got zero skin in the game. All I'm doing is chart reading. All I'm doing is putting my limit order in the right spot. If I'm taking the correct trade, it creates a manageable trade. But the same way that it was very mechanical for you to find your entry in the beginning, you'll find that if you embrace that same mechanical approach in your management initially, it's going to take a lot of the fear out. It's going to take a lot of the indecision out. If your exit conditions are if-then, if I have this, then I have to do that. What it does is it reduces the emotion, guys, but you will create a management plan based on your experience reading the indicators. This KISS plan isn't a death sentence to keep you doing one thing. This KISS plan is 100% designed to find you success as you find your own thing. So your very mechanical management plan and the KISS plan, guys, revolves 100% on your ability to recognize where the market is most likely to continue. Your stop will go where it shouldn't go. Your entry is in the right spot, and you're either going to get stopped out or you're not. You'll never be in control of whether or not this wins. You'll only be in control of whether or not you have the advantages. 70 to 80% of the time, though, you're going to find yourself with one of those reversal bars in the direction of the trade. You're going to reduce your risk 2 ticks above if you're following the KISS plan, and you're going to sit on your hands and you're going to do nothing. And you're either going to take a smaller loss, totally cool, or it's going to go to your first target. Guys, as you're a brand new user, this plan is designed to trade 2 contracts. You enter 2 contracts. Your first one will come off at $100 if it reaches that target. $100 builds trust in the plan. $100 builds faith in the methodology. $100 dries up sweaty palms and kills butterflies in your stomach. $100 is a victory, and victories are what keep us focused on the best of the best. You're also going to move your stop to break even because the reality is your large chart has the most momentum you could ever hope for, and there's nothing in the way. And I don't want you getting caught up on these little fluctuations that'll scare the bejesus out of you. So you're going to take 100, you're going to go to break even, you're either going to get stopped out break even, or it's going to hit that second target, guys. And that second target is $200 from your entry, which means on 2 contracts, 1 trade, no emotion. You just made $300. $300 a day is a $1,500 week, guys. $300 a day is a $6,000 month, and $300 a day is a $72,000 year. It doesn't have to be difficult. It doesn't have to have a bunch of charts. It doesn't have to have 10,000 rules to be successful. And in fact, what you're going to find is that the less time you spend looking for everything, the more likely you are to find the best of the best. And the less time you spend worrying about the money, but rather focusing on the process, the less the money becomes a concern, guys. So you're going to be able to identify your entry. You're going to be able to emotion-free move your stops, hit your targets, and ultimately get paid. And then if you go through this process, what's going to happen is you're going to find yourself taking the correct trades, and you're going to find yourself seeing more opportunities, and you're going to create a plan suited to your needs based on your ability reading the indicators. So I'm going to drop the KISS plan in there for you. This is the chart reading. And now I'm also going to give you, because, you know, I like to give stuff. I told you guys I'd give you everything that you needed, right? I'm going to give you your second trade. And your second trade is what we call a 50-50 trade. And a 50-50 trade means that the areas have the potential to break. The 50-50 trade means that the area isn't broken, that the path isn't clear. But because of momentum, because of the strength in the move, it has the potential to break. So this plan can never be high probability trend trade because the path isn't clear. But this will be your second trade. And it asks, is it from a good top or bottom? Which means that you have to understand termination conditions, and you have to understand that when a no triggers through termination condition reverses the market, it's a strong top. Let's change the language again. Strong. It is a strong top. It is a strong bottom. Decisions were made right at key points that reverse the market. You have to have momentum on both charts without question, because you've already sacrificed your clear path. And then this tells you no divergence on the 5-1. Guys, the KISS plan is designed to optimize your chances of success. So if you can't answer yes to all of these, the trade is less likely to win. If you don't have a strong top or bottom, the trade is less likely to win. The number one killer of 50-50 trades, of that medium probability trade, is divergence on the small chart. So much so that it reminds you before you ever get to management that if divergence printed, you shouldn't be in that trade. So much so that when you talk about management, it tells you again in bright red, seriously, divergence sucks on a 50-50 and you're going to lose it more than you win. And if you're trading with divergence, you're not optimizing your chances of success. Eventually, your ability to read indicators, let's copy this one real quick. Your ability to read indicators will help you make decisions on when it might be appropriate to change your thought process. But this is designed to optimize your chances of success with the 50-50 as a new user. I would encourage each and every one of you that if you're looking at those 50-50 trades, that you learn these rules, and if you have questions that you ask these rules, because this is the most lost trade by new users, is trading into that 50-50 with divergence, trading without the strength of momentum, not having a clear-cut area. So I gave you the KISS plan. Let me give you the 50-50 plan. Are there any questions? I have just given you guys everything that you need to be successful. I've shown you how to study it. You have Simulator to practice it. The only thing you need to do now is get repetitions so you learn to trust it. Guys, we still have not broken through that red fib. We still have not broken through that red fib. Termination conditions for the win, ladies and gentlemen. We didn't break through that red fib. And if you got in at a mid-band, you just lost. And we had weak triggers at 1-to-1s. And if you tried to get in at resistance, you lost. Do you guys see it? Whoops. But what did this look like with momentum? What did this look like with a clear path? Can we go back and circle that one? Quiet classroom today. I do want to remind you guys that I know this stuff. I'm hoping that you do. It went a little beyond. That one might have gotten you, huh? Sure was a good look. What about the potential to break? What did that one look like? Right to those 1-to-1s at the top triggers. Flat bands don't boogie. Amen. You took this one, Pete? Nice. All right, guys. So that's the first hour. It's the same hour every day. I'm going to go through all of them. And that's what we're going to do next. Is I'm going to scroll through and I'm going to start looking at the charts that you guys have presented. I'm going to start looking at them. And guys, I'm going to come back to these charts. I don't grade you on whether you took a high probability trend trade or not, but I'm going to expect you to write momentum, clear path, and an entry area. I expect you to write these things on the chart. Not for me. I can pick them out in a second. Because you guys that are chronically making the same mistake over, if you would just write this on the chart, it's going to eliminate so many of the errors that you're making. I promise you this. So I want you guys to keep that in mind too. As I go through and I start talking about these trades, see how often having these two advantages leads to success, and see how often foregoing those advantages leads to failure. So I'm going to take 5 minutes. I'm going to stretch. Recognize. Termination. Reverse the market. That's a strong top, guys. Triggers didn't break through. Reverse the market. I have odds favorable momentum. These areas have the potential to break. If I get a reversal bar, I've got resistance all the way up here. I've got resistance all the way down here. I'm kind of hoping it doesn't hit that big blue fib before it gives an opportunity. If I get a pullback, my lowest point of resistance
order submitted
is right there. But
order canceled.
We just hit support. Dag nabbit. Does everybody see how that worked? Just because I wanted a trade didn't mean that I got a trade. So what am I waiting for now? I've reached support. My triggers haven't broken. I need those small triggers to get below to give me an opportunity, right? And if they never get below, no more short trades. And guys, I'm just looking high probability trend trades. When you grow with the software, most of you, did anyone catch this short? Jen, did you get that one? The hardest thing is waiting. If they get below, Chef, if they smash through this area, absolutely. Then it'll be a 50-50 until the large triggers get through. Does that make sense? So now they're pushing. They're peaking. I want to see a couple more come through. I have the termination. I have the reversal. I have odds favorable, and I believe my chart is trying to crash. See if we get drawing objects off of it, if that helps. So now I got this 50-50 look. If I get a reversal bar right now, guys, I've got two lines inside of triggers. I've got one line inside of triggers. Oh, and I even built a KISS plan.
Order submitted.
That mid band is right on the edge, right? 2 ticks below. No divergence, strong triggers. One area inside of favorable large triggers where the market is likely to continue. I'll go 2 ticks below it. Am I following rules? That's the only thing I'm worried about. Am I following rules? If I go to my 50-50 KISS plan, it says that I have to have a strong top. I have it. It says that I must have odds favorable. Certainly do. It also says that I have to have no divergence, strong triggers. There's my entry, guys. I'm powerless at this point. It either works or it doesn't. But the only thing that I'm concerned about, the only thing that's going through my head right now is, did I follow my rules? Can I present this trade in a court of law and say, I had everything that I needed? And if the answer is yes, well, then I have to accept whatever the outcome is. Does that make sense? That's the hard part. I have to accept whatever the outcome is. Win, lose, or draw. Because this is the one that optimizes my chances of success. Isn't that frustrating? Is it going to get me? Is it not? It might not get me. Those sons of guns. I'm not going to get caught up on fluctuations, guys. I'm going to hold fast and I'm going to wait. It's either going to give me my entry or I'm not going to take an entry. Well, and if I had chased it, my stop still goes in the right spot, right? But look at that. 5-1's just a fluctuation, guys. 5-1 is a small time frame. 5-1 isn't a large chart. My large chart still says down with the potential to break. They missed me again. 2 ticks would have been right there. We'll see if they get us at 2 ticks. But guys, all I'm doing is I'm just saying, hey, these are my rules. Let me follow them. I either get them or I don't, right? I either have my rules met or I don't. Some of you may have caught this. Some of you may have been a tick or two lower. Some of you may have tried to get in here and got stopped out right before. I pay extra, Pete. My brother owns the company, so I get special fibs. No, I'm just kidding. I completely rebuilt yesterday, Pete. Well, guys, I guess it wasn't my money.
Order canceled.
But if you got in 2 ticks below, you're short and getting paid. But it's the same thing. And what we're talking about right now is whether or not the rules were met. Look where the tail lines up. It missed me. They still may come back. I don't know. But it's kind of cool when that happens live, right? All we have to do is say, are my rules met? Let me talk about momentum. Let me talk about where it's coming from. Let me talk about my path. And then decide if my rules are met. Some of you will say, with a strong top, that you'll still
Order submitted.
take that short if they decide to come back. That's divergence on a 50-50. The next area, Gino? I would. But this area is not broken. Now it has divergence. Now I have weak triggers. This breaks all my rules. Let's see if it'll stop us out with divergence. I hope it does, because I broke my rules, guys. I don't have strong triggers because the smalls are on the wrong side of the large. I have divergence on a 50-50. We're going to see what happens. Let's go back to the KISS plan. Strong top or bottom is a yes. Odds favorable in the 13-2 is a yes. Smalls outside of the large is a no. No divergence on the 5-1 is a no, guys. I have 50% of my advantages on a medium probability trade. Does anyone feel good about risking their money on that one? Because right now you're saying to yourself, man, I hope it works. I hope it goes down. I hope that I don't lose money. I hope that my broken rules produce anyway. And here's the thing is every now and then they're going to let you guys get away with it. Every now and then they're going to let you win. But it's like they have cameras. It's like they know exactly where your fear is. This broke half of my rules. I hope that it stops me out. I hope that's the lesson. It may not. Because of the strong top, it might still go down. So let's see what happens. Let's see if we can make $100. Actually, we're over the $100 because this is the S&P. But you had your reversal bar. So there's the KISS plan risk. There's my first profits. So now I'm break even. There's my trouble spot. Let's see what happens. This is a medium probability trade. This one breaks the KISS plans. Doesn't mean it's not a good trade. It means it's not your highest probability trade. Does that make sense, everybody? I love getting paid on trades. But I want to get it consistently. Let me get my trade markers on there. I was kind of hoping this one would lose. I'm not going to lie. Doesn't look like they're gonna. Looks like that strong top pays dividends on a 50-50. Well, at this point, Chef, if divergence prints, if I get a second divergence on a 50-50, I don't want to be in that trade anymore. So my stop would actually go there. But what I'm trying to do is I'm trying to keep it on the KISS plan. And the KISS plan says break even until your second profit target is reached. If this were actually me trading, this would have been my first target at that one divergence line. And I would be 2 ticks above the reversal bar marker. And my target would be down here at this key Fibonacci area. They didn't get through, Jonathan. In order to consider it broken through, both lines have to get through. But Adriana, I think we were talking yesterday, right? That if I have a strong top, my plan says that I'm willing to forego one divergence because I believe in the power of strong tops and bottoms. Do you guys remember that conversation yesterday? Which means in my personal plan, this fit the rules. In the KISS plan, it doesn't. And this is kind of the difference, guys. The more time you spend reading these indicators, the more time you spend seeing these patterns, the more times you spend talking in terms of advantages, you're gonna find more opportunities. Buy means go up, Jonathan, and there is no we. There is no we. What does your large chart say? Your large chart says momentum. Your large chart says 50-50. And your small chart already has one divergence. And the small triggers are on the wrong side. And there's a second divergence. My rules say get the hell out of this trade. One divergence is bad. Two divergences are even worse. Doesn't mean that it won't win. But that's no longer my trade. So you have to know what your rules are. My rules say no more trades with two divergences on a 50-50. Why? Because divergences kill a 50-50. Pretty cool, right? It's not emotion. It's not wishing or wanting or hoping or praying. What do your rules say, guys? You've got to have very precise. This is why I'm going to get in. And this is why I'm going to get out. This is what it takes for me to pull the trigger. This is what it takes for me to exit the trade. And what you'll find is these trades that aren't perfect create opportunities for you to still get paid because you're a chart reader. Pretty cool, right? And this is what we do every day. We start so basic, and then you'll grow from it. I promise you'll grow from it. But if you can't do the easy stuff first, you're going to struggle. All right, Paul has a strong top. Do you guys see it? Paul has a strong top. He has a 50-50. He has no divergence. Takes his entry. Correct stop placement. Easy money, guys. This is 100% rules met KISS plan. And Paul said, well, shoot, that was a lot of risk. It was a lot of risk if it were the wrong trade. Paul, this is beautiful. I'm actually going to steal yours, and I'm going to open up my spreadsheet real quick. And I'm going to go to client trades because for me personally, this is the kind of trade I never want to miss. This is the kind of trade that makes children sing songs about you. And then let's get that in there. So there's one more. And then guys, I want you to see this. Why don't I take 50-50 trades with two divergences? Because this happens more often than it doesn't. Isn't that amazing? All you need is rules, guys. All you have to do is know why. Why am I going to do it? What's it going to take to get me in? What's it going to take to get me out? And what's it going to take to keep me out if my rules aren't met? And as soon as you establish this, life becomes easy. And I put this picture, and I gave this one to Paul yesterday. It was kind of funny. If you've seen The Last Samurai, then you remember this one. Too many minds, guys. Focus on one entry to exit, then move on to the next trade. Once one of them is easy, once one of them is second nature, once one of them doesn't take any thought process. And if you're trying to find the high probability, if you're trying to find the momentum, if you're trying to find the medium probability, if you're trying to find a jump in trade, guys, you're going to confuse yourself into finding absolutely nothing, and you're going to mix up rules. And ultimately, you're going to get frustrated. So Jonathan, no such thing as a soft top. Triggers didn't break. Strong top. Absolutely beautiful read. And I know that you were giving it that little hitch, but we just cleared that up, right? Price reaches support. Absolutely no triggers break through. No reason to take this short trade. Not clear. You said no trade. Cancel that order. If your rules aren't met, cancel the order, guys. Nobody's going to make you take it. Here we have odds favorable and a clear path, and you jump right in. And I don't know how you managed it, but I hope you stayed in until the momentum was gone. And you've got your stop arbitrarily placed in the middle of nowhere. And this isn't a trading plan, guys. Jumping in and putting your stop just in any place where you want it to be, that's not a trading plan. This is how you pay $1,000 in commissions and have no profits at the end of the day. So get that plan in there. Why did you jump in here? Odds favorable momentum, pull back with no divergence. That's your momentum trade right here. This is jumping in right into a 1-to-1. There's a big difference. 1-to-1s are where I take half of my profits off because they typically create a bounce. Adriana, strong top, a mid band with the large triggers a full bar away is a termination that reverses the market, that gives you odds favorable, that gives you a pullback to resistance inside of triggers, which gives you a beautiful exit and profits. And then once you get that third divergence, Adriana, no reason to hold that long. No reason to put a stop above an area inside of favorable large triggers. Get out with the divergence, right? Get it over I know what you were doing. You were holding for the bigger move, right? 1, 2, 3. That fourth divergence, jump ship. Jump ship. Your small chart told you we're going up. Does that make sense? Small chart is an entry chart, guys, but it's also going to be a management chart for you. Jonathan, you had yellow 1-to-1s right here. Jonathan, your read is absolutely phenomenal. This is your momentum style entry right here. This is the one that Nexgen teaches. Jumping in, you got to have room to get paid, brother. And those 1-to-1s, that's a tough spot. I would have taken profits at the 1-to-1s, then go break even. And then Adriana, everything says down. You take your entry, you wait for it because it's the NASDAQ. And you wait for that reversal bar to start going down. You get profits. And then once again, weak triggers, divergence. No areas inside of favorable large triggers. What a great. Claire, I'm not live. I don't go live during the classroom. I make it live after. Because what happens is I need somebody to monitor it for all the spam bots that show up and the porn links and all the nastiness that people like to put in there. And I can't moderate it. And I don't mind if people, question everything that I teach. But on YouTube, people question it with foul language and call me names and say that I'm a cheat and a liar because they couldn't get rich because they bought software, even though they never studied it. So I'll make it live when class is over if you want to go review it. And I think eventually we are going to get to the point to where we're live every day because once the funding company hits, I think what we're going to find is that there's too much going on for us to stay in Discord. So Adriana, great trades. Trading with momentum, trading with direction, getting paid. I think that you might be holding a little longer than you need to. Weak triggers, divergence, weak triggers. That's recipe for retracement. When you go, anything can happen on both charts and the divergence starts to kick in. This is where I just get paid and I'll let it sort itself out. I remember watching this set up and saying, yeah, I just don't have anything to do. Jonathan, you're doing it too, brother. So here we go. Everything says down, and you jump in, and it's just a jump in trade. Odds favor momentum clear. There is no, well, there's a pullback, not to areas. So Jonathan, let's talk about this one real quick. This is what I want you to see. Everything says down on the large chart. The path is clear on the large chart. And you jump in, right? If I had to label where your stop is, and let me do it this way. And I think that you're going to like this. Guys, you have to define your entries. If I have odds favorable momentum, if I have a clear path, my entry for a high probability trend trade is an area inside of favorable large triggers, right? So Jonathan, you went early. No big deal. Who cares? You went early. Doesn't matter. But here's the deal, brother. Is your stop is exactly where everybody was waiting for a trend trade. Your stop was exactly where we expected this market to retrace to. Your stop needed to be up here. Like, if you get in early, that's fine. Whatever. That's your prerogative. But your stop has to go where the market shouldn't. Otherwise, all you're doing is chumming the waters, man. You are 2 toes cut off, swimming in the ocean, hoping a shark doesn't bite you. Does that make sense? You did move the stop? Okay. So the correct entry was at 43. You're in at 41.8. That's $120 of extra risk. That's $120 less profit that you're making on this trade. Does that make sense? Guys, I know you love jumping in. You guys love this jump in trade. Learn how to manage them. Come up with a plan. You guys are killing yourself on these things. I'm watching you give so much money away. There's your jump in. Why are you hoping for home runs on a momentum trade when there's no momentum? All right, so now I have to go to this picture. Or not picture. Well, everybody's quick on emotion, Jonathan. That's why we have rules. Thank you for posting that. Emotion will whip your ass every time, guys. Emotion makes you fight the biggest guy on the football team for the prettiest girl in class. Emotion is what gets you in trouble, guys. Rules are based on patterns that repeat themselves more often than they don't. So every time you sit down to trade, this is what the people that win more than you do, guys. They know exactly why they'll enter a trade. They have a set of rules that have been proven to create an advantage. No, Morgan, nothing that I do. I'm in control of everything I do. I refuse to automate anything because things change too fast, especially on the NASDAQ. If you can't move a stop with a reversal bar marker, then you don't need to be in the NASDAQ. If you can't keep up with it, you don't need to be in it. As a general, not you specifically. Guys, the people that are on the other side of your losing trades knew exactly why they would enter the trade. They had a rule, they had a pattern. They also know why they will exit. And this is the part that new users skip, guys. New users trade on emotion. I hope it goes. I want it to go. I sure wish that it would go to my target. And they completely ignore all the signals saying that that trade's not going to work anymore. And my father-in-law, rest in peace, used to say, wish in one hand and shit in the other and tell me which one fills up first, guys. And that is most people's trading strategy regarding stops. You have to know what's going to get you out. In the beginning, I give you rules to eliminate your emotion, but the KISS plan rules for a high probability trend trade are designed for a high probability trend trade. If you're not in a high probability trend trade, you're going to have to manage it differently. Jonathan, if you jump into a trade and you're hoping that the only thing that gets you into a trade is that momentum, you don't have areas protecting you, you're just hoping that it drops, you have to have some reason to get the hell out of that trade. Momentum is one thing, guys. I don't teach a jump in trade. because this jump in is on the wrong side of my momentum indicator. I don't teach this one. Never taught that one. This is a trade that you guys came up with, and I keep pleading with you. Develop an exit plan. Develop an exit plan, guys. It'll take a lot of the pain out of your trading. It'll take a lot of the emotion out of your trading. It'll take a lot of the hope out of your trading. All right, D. D said, I jumped into a trade. Strong momentum, strong triggers, above the triggers. Everything is up, clear path. He loves it. So he jumps in right at the top of the move. And so, D, can we agree that you are just hoping? Oh, she. Thank you. I'm sorry. Thank you for correcting me. I should have known. Your avatar's so pretty. So she jumps in with the momentum. No, I apologize. I didn't realize that you were a lady. I can't see unless you have an avatar. I go to the default. So, oh my gosh, if you're woke, I just killed your pronouns. And my words are dangerous, and I'm probably going to get canceled. I may not be here tomorrow, guys. Nope, nobody comment on it. So the entry was incorrect. Learn that you need to click buy way below, then move it to your entry area. Entry goal was to be between the large triggers where the pullback was inside of the large triggers. So D, how about areas inside of triggers? And this is where the challenge comes in, right? You're counting on a trigger line to get you in. And the areas are where the advantages are. The areas are where the bounce is. And this one just didn't give it to you, unfortunately. But I don't disagree with this trade. With all this momentum, with everything still going up, this is awesome. And this is that jump-in trade that everybody in the room appears to be doing now. But your entry is 100% momentum-based. So it's okay to exit when that momentum goes away and wait and wait for the pullback to an area inside. I like the trade. I really do. And your hold is based on all of these things. And I love that you got paid on it. This is such a hard hold, though, because you've got 3 divergences in the same price range. You've weakened the triggers on your large chart. And this is 100%. Large chart's taking you where you wanted to be, which is why we learned to trust the large chart initially. I like it. And I will never mess up the she thing again. I love knowing if you guys are men or women or what's going on. It's easy for me. So that's one of those ones when it's not a high probability trade. Okay, cool. You have to be worried about that stuff these days. I'm really not, though, because I'm old and crotchety, but we're good. Who was this? Trading off of a termination that reversed the market with odds favorable, patiently waiting for resistance, and then getting paid with all that momentum at support. Who did this? Let me scroll back up. Pete? Oh, Pete, you took the momentum trade, and then you refused to believe that momentum was over. That's kind of tough. That is 71.25 all the way up to 76.5. What is that? Over $250 of drawdown into those one-to-ones. I'm glad you held it. I'm glad you held it, right? So, Pete, just something to think of. Just something to think about. Let me see if I can find the picture real quick. Management's the second piece. I'm pulling up my PowerPoint, and you know what? I'll drop this PowerPoint in the room too, because guys, it does have some good management ideas for when you progress beyond the KISS plan. Oh, you know what? I don't even have to do this one. I've got this one, Pete. Yeah, get paid. That's the goal. And I know that you're doing Apex, right? Or you were. I see that you're back on Sim. And that's okay. That happens to everyone all the time. Because you got to work through stuff. Let me find it real quick. So I'm working on all these little blogs, all these little things. I'm going to open this up, and I'm also going to drop this in the room for you. Well, I'm going to try to drop it in the room for you. But small chart one-to-ones for management. Just going to show the picture. If I'm in a long trade and I reach one-to-ones, half of my profits come off right there. Right on. Half of my profits automatically come off right there. And then if I get a signal to re-enter, I don't have any problem doing it. So if we're looking at your chart, you're in 6, I'm off 5 right here, and I'm back in 6 on this reversal bar with this look. Does that make sense? So a couple different things happen. One, you get paid, and that's the goal. The goal is always to get paid. And the second thing is you're double dipping. You're getting paid at the same darn prices because the large chart still says go, but my goal is to get paid. I'll keep one on there, or I'll take them all off and I'll just re-enter. But I'll keep one on there in case it just drops. Maybe I catch the runner. So stuff to think about, guys. Your management plan is going to grow a lot as you grow a lot. And there's a million ways to do things. But the number one goal, if you're in a prop firm, the number one goal, if you're in an evaluation, the number one goal should be to get paid. To take money and risk off of the table so that you can get paid, so that you can get successful. Claire, are you ready? I hope you can see all this. Let's see what you did. All right, 5-1 trend trade. Momentum on the 13-2. I'm going to have to say no down here because the smalls are inside of the large. Clear path on the 13-2. Weak triggers at an area. It's 100% a termination condition, Claire. This is the 50-50 look. That big split between odds favorable. This is the look that breaks areas. This is the look that creates that bounce. Does that make sense? So you're trading into a termination condition really without momentum here. And at this point, we're just kind of hoping. We're just kind of hoping that it goes. And that strong tending market is great until you hit a termination condition. So I think a little clear path lesson pays dividends for you here. And then this one is the perfect momentum trade. Small triggers break through, it pulls back, and you ride that momentum down. And you could have gotten paid at 65.25 on that next one, and then giving it all back, right? Giving it all back. Well, maybe not all of it, but an awful lot of it. So, Claire, can we talk about stop placement? Because the market's cranking, right? If you're going to give it that extra shot, if you're going to take that next trade, can we agree that this fib inside of triggers, that's where it should bounce from, 100%? Put your 4 ticks on it, right? Give it a shot. Don't give back $200, $250 trading in determination conditions without momentum. So keep it very simple. And guys, when I told you that you're going to start to see trades in the room that were void of momentum or termination conditions producing losers, this is one of them. And that's okay, Claire. You've got to take these trades so you get good at not taking these trades. Termination condition. Everything says down. What is this circle? Top or bottom momentum trade? Okay. So 13-2 and 5-1 chart suggests termination is true. I'll give you that. No triggers beyond edge of Fibonacci areas. Absolutely. Small triggers crossed beyond the area. I suppose. Entry after 13-2 reversal bar true with momentum on the fibs. 74, 73.50. So this was your entry right here. Okay. It looks like it fits your rules 100%. Does divergence off of the large triggers with the small triggers above affect your decision at all? It looks like it fits your rules 100%. Termination, smalls roll, and you'll see a lot, Claire, that it's this pullback to the large triggers that have rolled, that's your entry, and you nailed it 100%. Stops in place. This is what's hard about these sometimes with the large triggers up this strong, especially off of a termination condition. These are always hard for me to manage. I like it though. Fits your rules 100%. Great job on that one. Did you hold it all the way down? Or that was your exit right there? You did hold it? Beautiful. Because this is your exact same rules met. 100%. Awesome hold, Claire. Very nice hold. And then it comes through, and then those same rules are met again right here for the momentum trade. And it just keeps going. Claire, putting on a clinic. I love it. You don't post a lot, but when you do, it's pretty rad. Nice job. And then we get the 50-50. One divergence from a good top. I love it all day long. You chose not to trade. So this is that good growth period. Claire, and I know that you've been doing this for a while. When I have a strong top and when I honestly have that great look of momentum and smash through, one divergence doesn't freak me out too much. Two divergences is an absolute killer. But when my charts look like this, I will almost always take the one divergent shot and manage very aggressively. Which means that the second this divergence prints, I'm out 100%. And that's just a little growth thing, right? Because fights happen at fibs, and these divergences let you know that the fight is happening. Great job following rules on that one. I think with your ability to read charts, you're going to grow out of that rule pretty quickly. Go back and take some pictures, though. And I think that you'll find, if you go back and find those one divergences from a strong top or bottom, it might be worth it to you to take it. If you're brand new, until you have the chart reading ability to piece it all together instantly, seeing that blue line is a deal breaker. And this is that one where large triggers are down. This divergence suggests the midband. Your large triggers roll back and it's a pullback to that immediate momentum. It's the same look. It's the exact same look as that short you took, Claire. That's a tough long. That is a tough long. That's 50%, right? But notice how it pulls back to the small triggers that are up and wide. Divergence is there. You've had two triggers roll, smalls above, no divergence. If you're going to take a shot, you absolutely nailed it. I don't know if you took the trade or not with only half of your rules met. Because this is when it's not a strong bottom. This is the one that typically continues back in the direction. And if I'm not mistaken, that's kind of what it's doing, right? There's your gap theory, D. Price reaches the mid-band and the fibs, and it comes right back to those large triggers. There's that gap theory again, guys. Doesn't mean go short. It means don't try that momentum long. I love it. And now we're kind of stuck, right? The larger down, but the smaller up. The background's green. I don't have a clear path either direction. Is it safe to say that I don't have the advantages that I need to take a trade? Does everybody see it the way I see it? I just don't have the advantages that I need to feel good about risking any money in this market. Not yet. But I know exactly what I'm looking for. I know exactly what I'm looking for. Jen, I'm about to come through the monitor at you. I love it. Sell, buy, sell, buy, sell, buy, sell. You're killing me. Killing me, Smalls. I love it. This is the 90% of the day to do, right? When there's just not an advantage. And that's crude oil. That's a small chart. Let's see what all that nonsense looks like on a large chart. You guys want to? Uh-oh, that's my untitled workspace. Hold on one second. I forgot to close that one out. All right, crude oil into a termination. Can't go short, can't go long. And Jen, look at all the indecision. So did everyone hear me when I said that fights happen at fibs? That decisions are made at fibs? That's where the bad stuff happens, guys. That's where the people in control either want to take profits or not. And I want you to see this. When we got up close to that fib, you can see the fight. Somebody mentioned that in the room, right? All the divergences going on. I want you to see this, though. From the time it reached to right here, the large chart hasn't done a lot. Look what the small chart's doing. If you don't believe that people are fighting at fibs, guys, go back to every fib on your chart. And let's see what the small chart looked when you circle the fib. Well, that one wasn't much, right? There's a fight right at the fibs. There's a fight right in between the fibs. Do you guys see it? One of the easiest ways to stay ahead of the people in charge, guys, is to have that clear path. One of the easiest ways to not get whipsawed out of all your money is to have a clear path, to let everything agree. And it's hard because you have to sit there and do nothing. And your brain's going to tell you that you're not getting paid if you're doing nothing. Paul says, I'm cool with it. I'll wait. I'll get momentum. My path is clear. I'll buy a mid-band, and I'll rock that thing all the way up. And then Paul, we're working on this, aren't we? Are you in here, Pineski? Let's talk about when we can hold, guys. And I know that, Paul, you're predetermined. When my large chart looks like this, as long as I'm not closing below these small triggers, guys, you can't make me get out of a trade. I will hold that thing until I get a reversal bar on my small chart. And it has absolutely changed my life. Paul, you've gotten the pictures, right? The lesson. So let's talk momentum. Let's do this real quick. I want you guys to see something. I'm going to open up my small chart real quick. And we're going to do this again, guys. I'm going to take all of my indicators off. So, Paul, this is your how to hold for bigger moves and feel good about it lesson. Let me get everything off of here real quick. And I'm telling you, Paul, this will change your life on these holds. This will change your life on these holds. Let it come up real quick, and then you'll see it. But you're going to see this phenomena, guys. We're going to talk about momentum phase. So, Paul, let's say hypothetically, this is your long trade, okay? There's two spots in every trend trade, guys. The first spot is when you're waiting for price to get back above the small triggers, right? And that's that one where quick profits, you have to manage all that, right? This is it. This is where you got to do your work, Paul. You're comfortable with that. If I look at your charts, there's no doubt in my mind, you're not just jumping ship. You're getting paid, right? But this is the range where if something's going to go wrong with that trade, this is where it's going to happen, right? Below those small triggers. Does that make sense? This is the first part of it. That's this right here. But here's the deal. If we scroll back on a smaller chart, once I get above these small triggers, do you notice how the market continues up until I get a reversal bar? Hold on. Once I get above them, the market continues up until I get a reversal bar. Once I get below them, the market goes down until I get a reversal bar on the wrong side of the triggers. So what I'll do, Paul, when I'm trading, let me put my template back on. And you don't have to do what I'm doing, because guys, I might be this crazy Yahoo that you never want to listen to. I don't think that's the case, but my trading may be different than yours. So what I'm going to do when I'm trading, and I think I'm going to hold for a bigger move, right? When I'm willing to let that second contract run. The other side of it is I have to be willing to give a little bit back if I'm going to take that hold. But was this the one that we took in the classroom? No. So here's a good example. When I take the momentum style trade up, Paul, I get paid. You don't even need to look at all of this. Took a short, had to manage out of it. Took a short, had to manage out of it. And then when I go long, I hold that one until it gets to the wrong side of the triggers. This is a momentum trade. My rules say hold it until the momentum is gone. Get paid at your target. And then if you get the reversal bar, cool. If you don't, if you never get that reversal bar below the triggers, you're going to hold that thing until the end of time. You're going to hold that thing until it forces you out. And I will literally chase the reversal bar marker. So obviously this doesn't make sense. But if I were in a long trade, my stop would literally be right here on this reversal bar marker. And until that reversal bar happened, I'm 100% committed to the trade. So this is crude oil. If I'm in down here, right, coming off of support, get my close, whatever, feeling good. If I'm holding, if I'm like, I'm going to hold this trade. Everything's going up. I love the higher divergence, the good bottom. I'm going to force it to give me a reversal bar to get me out of that trade. Adriana, take care. Just something. Just a little something, something. Look at that termination condition held too. But let's see if we can find the same lesson, because I'm out of pictures, guys. That large chart's too large. Let's back it up a little bit and get some room. Oil news. So Paul, if you took the momentum style trade right here, see how there's no reason to exit until right there. That's your reversal bar. So for you guys jumping into trades saying, oh, I sure hope this thing goes. Maybe that can be incorporated into management a little bit for you. Oil news coming in. Let's go to crude oil and see if it shakes it loose. What do you say? There it goes. Morgan, I answered it and I swore in front of God and everybody that I wouldn't repeat my answer. So, you just missed out, brother. No, I'm just kidding. Let me read the question. Heard you say that NASDAQ has different ways to go about things. Do you have separate rules for NASDAQ? I've been looking at the Excel spreadsheet. That was news, Rob. That was oil inventories. Made it spike like that. Somebody had a reaction to news. So under client trades, Morgan, tell me first, are you trading the 34 and the 10? Or are you trading the 34 and the 13? Because there's a different set of tools that I use depending on it. And guys, I'm going to tell you right now, if you're not good at your rules, NASDAQ's going to chew you up a little bit. So 34.13. So, bum, 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 bum. Yeah, it's a good one. It slows it down a little for you. So for me, there's two ways to go about trading the NASDAQ. The first one is that the rules are met, that you have momentum, Morgan, that you have a clear path. Because I'm going to tell you right now, the NASDAQ reacts to areas. And those pink 1-to-1s that you've gotten used to ignoring on your oil large chart or your ES large chart, pay attention to them on the NASDAQ, because your NASDAQ large chart is a 34. It is not a 13.2. Your 13.2 is your entry chart. The same one, Morgan, that is the large chart for crude oil, for the S&P, for gold, for all of those, is your tiny little entry chart for the NASDAQ. It moves so fast. That's the only way that we could slow it down to make it tradable for most people. So understand that from the beginning. And then, Morgan, I think you've been around long enough, right? You're probably, man, Jonathan, that's not dropping pretty hard. That was one bar. Pretty hard is like 50 bars. So this is your entry chart for NASDAQ, Morgan. This big old chart, right? You're not going short with that look, ever. Because you're like, I'm not fighting the large chart. So when you look at a NASDAQ small chart, it is the large chart. So there's this one thing that's going to keep you out of a lot of losers on these trend trades. But again, no, Jonathan, I don't look at the 5-1 until my rules are met on the large chart. Otherwise, I say things like, it's dropping pretty hard, and I start looking for shorts when everything's green on the large chart. And I've fooled myself before. Steve Diego, you have a lot on your mind. Stop deleting it. Let's see it. So when I get to my area, Morgan, when I have odds favorable momentum, when I have a clear path, and I'm looking for my entry in the NASDAQ on that 13.2 chart, when price reaches my area, I have to look at my small triggers. I have to make a decision. Are they above the reversal bar marker? Or are they below the reversal bar marker? And I'm going to tell you, this takes quick reflexes. If they are at or below the reversal bar marker, I sit on my hands and I don't take the entry at the midband. Because I will not fight these small triggers on the NASDAQ. And you can see how they react as resistance as that market pushes down. So there's a level of patience that you have to trade the NASDAQ. It still may go up, but until we get to the other side of this momentum indicator, do you remember how I was just telling Paul, as long as I'm left of those small triggers, it's going down, and the only way it's going up is if it gets to the other side? So I utilize that for NASDAQ entries. I utilize that concept for NASDAQ entries, that I have to be out of the momentum phase. And then there's the other side of it, is if all my rules are met 100% and it pulls back to my area, Morgan, and those small triggers are above the reversal bar marker, then I'll get in at the area because I've got room to correct back to that little moving average. And remember, this is a 13.2. This is a huge chart. So it's almost like the gap theory going up there. So let's see what you got. But once you get that in, it cuts about 90% of your problems out. So this is a perfect example. If everything is met and you're like, I can't wait to take the long trade, you wait for your reversal bar. And then once you get it, dude, it's money, 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 right? And you're in down here. Pretty cool, right? So there it is. There's your lesson 100%. No, not the reversal bar. Not the reversal bar. Hold on, I'm typing it out. Close on the correct side of the small triggers. Close on the correct side of the small triggers. Let me see if I can find an example real quick. Nasdaq's a pain in the ass. Until you get it down, and then I really don't trade anything else. I'm trying to see if I can find one that gives you that look. And then Steve, I'll get to you. I mean, there's another example of the small triggers for the win. But see how there's the reversal bar into the triggers? A lot of times it'll push back down if it's not on the right side yet. So I'm real adamant about close on the correct side of the triggers rather than just the reversal bar in. And I'm not seeing any examples of it. I'd love to see if I can find one. But it's not uncommon to see a reversal bar into the small triggers and then only have it push down even further until you get the close on the other side. And that really, for me, large chart wins, right? Large chart's always leading the way. And there's a little bit of patience that comes through on your entries on the NASDAQ that'll save you a fortune. Jerry, I usually wake up around 5:30 Central. I'm in front of the market by 6. I'll watch it until I start class here, and then after class, I'll watch it. I don't care about the volatility. The only time NASDAQ is too fast for me to trade is during news. But I am so in tune with what it takes to get me into the market, and I'm so in tune with what it takes to get me out of the market that it takes me a fraction of a second to make my decisions because my plan isn't big. I don't have a lot of trades. I don't have a lot of rules. I take high probability trend trades, but I incorporate that little bit of patience. So sometimes I have even longer. Yeah, then I would say don't touch it between 9:30 and 10. This was somebody's right here. If I have divergence off the low, if I'm using the 10-2 for an entry, not the 13-2, I wait for a reversal bar. Not a close on the correct side, but an actual reversal bar. If I am trading the 10-2, and you don't have to, guys, take whatever works for you. If I'm using the 10-2 for entry, it's a little bit faster. Divergence on the high, I'm insisting on a reversal bar. And if I never get it, there's just no trade. That looks exactly like the picture you posted, didn't it, Morgan? So this actually buys me more time. It actually buys me more time. But it is a faster chart, and you gotta be where you want to be with that. I can't tell what size chart she's on, Steve, but I would wager to say that it's a 34 and a 13-2. Yeah, I would never consider, you're welcome to, I would never consider trading a 13-2 and a 5-1 on the NASDAQ. It's too fast. I don't make recommendations. I will tell you, Morgan, that the range chart is a confirmation chart. That's it. That's all. I rarely use it. I use it for one trade. I use it for one trade from good tops or bottoms. That's it. I don't use it for trend trades. I don't use it for anything. Well, they may not have been from today, Steve. Steve, what time zone are you in? What time zone is your computer? Pacific? So go look at 5:42 a.m. Okay. What contract are you on? Did you roll your contracts? Because they rolled earlier this week. September. Hold on. Let me go. Yeah, I don't know. Maybe she's got different charts than you. Show me your charts at that time. Let's see what yours look like. Because right now, all I'm doing is guessing. All I'm doing is guessing what it is that you're looking at. So show me what you're looking at. And then Jerry S., I got you. Let me give it to you. 1 second. Sorry, I just saw that. But if it's too fast for you, 10-2 is going to make it faster. Just so you guys know. QRST. Man, Morgan, it's one of those things. So you're brand new. And it's a wonderful place to be. It really is. Being brand new is a wonderful place to be. But being brand new in futures trading is like being 13 and going to your first school dance where 90% of the girls have gotten their boobies. Sorry if that's crass. You are going to be so distracted that you are never going to be able to see or focus on one thing. And that's kind of how day trading is in the beginning, guys. The more bells and whistles you put around you, the more difficult it is to focus on what's important. You're scared to death. Exactly. So one of the reasons that we keep it so simple in the beginning, one of the reasons that we stay so focused on the very simple approach. And then Jerry S., there's that template in there for you. Is because the more noise you add, the harder it becomes, guys. The more noise that you add, the harder it becomes. And there's a reason that you have to learn. I'm sorry, Jen. There's a reason that you go to Biology 101 before you get a cadaver, right? And there's a reason that you have to pass your math classes before you start going into those engineering courses. Because if you don't have that super solid, easy, second nature foundation, everything else turns into a distraction. Steve, do you have that picture of your NASDAQ for me? $13.2 is your entry chart, brother. 13.2 is your entry chart. Here, hold on. I'll pull up my NASDAQ. I will pull up mine. That'll take just a second to load. So if you see, I'm a 34.5. This is my large chart. And 10.2 for me is my entry chart. So Steve, what we've done is we've created a template that'll turn your 13.2 and make it look like the 5.1 from any other. So you get the large and the synthetic, so you can take those advantages. And just because the patterns repeat themselves, all that good stuff, NASDAQ is very much an aggressive market. It's a fast market. It's a market that overruns a lot. And Morgan and everybody, that's why the focusing on where your closes are in relation to those small triggers on the entry chart pays such huge dividends. I love the NASDAQ. I have trouble trading the S&P and crude oil now because it's like watching paint dry. And it's difficult for me to do it. So this will come up in just a second. But the flip side of that is I know what I'm looking for, and I don't think I can stress that enough. since there's no other pictures in here, I'm going to share a story. Guys, you know I love my story time. Because I think I suck at analogies, but I think that you can relate a lot of things back to life, and it kind of coincides with trading very much. So I'm going to show you guys something real quick. Dun, 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 dun. Let's just see if we can find one. We'll do this. Hold on. And let me know if this makes sense to any of you guys. And it may not. Who knows? I don't know. I hope it does. I hope it makes sense. Let me find this picture real quick. Right on. And you know what's crazy, Morgan? Is before Nexgen, my only experience with the market was senior year economics class, where we had to paper trade as part of a class assignment. Before Nexgen, I don't have any experience at all. I don't have experience with technical indicators. I don't have experience with chart patterns. My first 30 days was me fighting with my brother, telling him that you can't sell something that you don't own. So even the concept of going short was ridiculous to me, and I couldn't wrap my head around it. And it really stunted my progress. It did. So teaching this class, I think that if you've never had any experience, I think it's pretty good because there's no bad habits, right? But if you do have that experience, then your brain's going to keep telling you there's got to be more to this. There's got to be more to this. Because when I was trading crypto, I had to XYZ. When I was trading stocks, I had to XYZ, A, B, C, D, E, F, G, right? In order to make my 2% returns at the end of the month. And then here comes this jerk that tells you, learn 3 rules. Learn 3 rules. And commit it to memory, and you can be more successful in futures than you ever were in anything else that you ever traded. And your brain is going to fight me 100% on this. No, it's not true. It can't happen. I don't believe it. And then you do it for a while, and you're like, well, holy shit, he's right. There is something to this. And yeah, Paul, sell. I can't sell. I don't own it. It killed me. All right, so guys, I'm going to tell a story. Here we go. Story time while my NASDAQ loads. So when I was young, probably better looking and not so broken, I used to race motorcycles. And there was this guy, his name was Keith Code. So if we got any motorcycle guys in here, you may recognize the name. And he ran the California Superbike School, and he had an amazing book. But what he talked about for motorcycle racing, and I think that it applies to trading, is as a brand new person, you have $10 worth of attention. Even if you can't spell. There's that English Lit degree going to good work. You have $10 worth of attention as a brand new user. And I kind of teach by this. So your first month, you're spending $5. No, it's easier than that. You're spending $3 on odds favorable momentum. 3 of your $10 goes to odds favorable momentum. And then probably $6 is going to termination conditions, which means that you've got $1 to figure out how to take an area inside of favorable large triggers. Is everybody with me so far, or am I just horribly off a base? But then you take 50 pictures of odds favorable momentum, and it doesn't cost you anything to see it. It's instantaneous. There is no brain drain trying to decide whether or not there's odds favorable momentum. And then you take all those pictures and you study it, and you're so good at termination conditions. I'm still going to say that it takes $2 because you're going to have to take a second and you're going to have to decide if it's broken, if it's clear, if it's 50-50. So let's give it a little bit. But what that does is it leaves you $8 to nail your perfect entry. And you're going to need it at first, right? Because you're going to want to get in here, Jonathan. And you're going to get scared and jump in here. And you're going to be like, oh, my entry's right here because I don't want to risk too much. Oh, let me get in here after all the confirmation. And eventually, you take the right trade. And you study it and you practice it and you take pictures of it and you present it in class. And suddenly that high probability trend trade, you've got it picked out before the reversal bar ever prints. You know exactly where you want to get into that market. Does that sound like anybody else's journey? And you will get to the point where termination conditions take nothing. And you will get to the point, well, you'll always have to think about this one a little bit. But then what happens? What happens? Now, I have $9 to learn the 50-50 trade. So now, because all of this became second nature, I've got the resources to find the next trade. But here's the deal. If it's still $3 to find momentum and it's still $5 to determine termination conditions and it's still $8 to get an entry, guys, you're overdrawn. You're focusing so hard on the one thing, how on earth can you ever expect to get the rest of them? And this is why every day I beg and plead with you guys to keep it simple. Why every day I tell you that if you just focus on one thing and do it well, it's going to open 1,000 doors for you. And I know that I sound preachy right now. So right now, Jonathan, can I use you as an example? You're not going to get your feelings hurt? I hope. Jonathan, right now, you're solid on momentum. You are scorching on momentum, and you're not spending any money on it, right? But you still have some issues on whether or not you're into a termination condition and room to your targets. And you are way overdrawn on your entries because you don't have any idea why you're getting in. You're just jumping in. So right now, your momentum is awesome, and your termination conditions are getting better, but there's a lot of investment going into your entries. So this is where it pays dividends to define your entry clearly, to make sure that you have such a clear path that you know exactly what you're looking for, and the only way that you'll enter the market is if your rules are met. 2 divergences on a 50-50, guys. No matter what happens next, I'm not allowed to take this trade. That's just me. That's my plan. That's how long it took me to decide whether or not I wanted this trade. Morgan, my small triggers are at the reversal bar marker. I'm not trading into that reversal bar marker. I'm not trading into those small triggers. Does that make sense, Morgan? Do you see it? Look at where the triggers are. Look at where I'm at. If you're on a 13-2, that's no trade. If you're on a 10-2, you might have a sell stop order at the reversal bar marker because your rules say wait for the reversal bar marker. But it's still 2 divergences on a 50-50, and they're going to come up and absolutely smoke me because my rules are broken. Does that make sense, guys? 2 divergences on a 50-50. Don't take the trade. The entry doesn't work. And guys, I'll take losers all day long. All day long. You have to have rules. You have to know exactly what it's going to take to get you into the market. You have to know exactly what it's going to take to not get that entry, to say, whoa, my rules aren't met. And you have to know exactly why you exit. So if you did enter right here, this second divergence was your exit condition. And if you hoped and wished and wanted and prayed, guys, you got your ass kicked and you just lost. Steve, what time was that trade you were looking for? Let's see if we can find it on my chart. It was somewhere around here, right? All of this stuff, I think. Did you put the time in there? So guys, I say this all the time. Just know what it takes. And if you're not sure, ask. Let's talk about it. Morgan said, hey, Mark, let's talk NASDAQ. And we talk NASDAQ. And that's what we do. Dee said, stop calling me a dude. And I stopped calling her a dude. That's what we do. And eventually it goes down, right? So maybe there's another way to catch it later. But once you guys know what you're looking for, it takes all the stress off. So Morgan, with the speed of this market, how do you feel about having to process an entire another chart? How do you have to feel about adding 2 triggers, areas, silly looking bars, when really all you need right now is a solid plan that kind of puts you in the right spot? But it's tempting, isn't it? But so-and-so uses a range chart. I saw John Novak post in the room, and he looks at a 55 and a 21 and a 34, and he looks at a 10-2, and he has a 21 range, and he's got an atomic clock that runs on nitrogen and unicorn tears. And without that, how could I ever do what he does? But the reality is, I can't do what John Novak does because I don't have 27 years watching the indicators. Unicorn tears aren't easy to come by, Morgan. What's your question with it, Steve? What's going on at 841 on the small chart? Oh, I think I'm crashing my chart right now. That has you vexed. Jonathan, directly into a termination condition, right? 100% directly into a termination condition. You entered at the area hovering in between, and you jumped out. It's true, Paul. So, Jonathan, why no mention of momentum? Why no talk about clear path? How come absolutely no talk about what it took to get you in? When you come back and look at this tomorrow, you're not going to realize that you traded into a termination condition from a bad top. You're not going to realize that you didn't trade from an area inside of favorable large triggers. You're not going to realize anything other than a chicken shit exit, which means you believe everything you did is high probability, which is okay. But that's going to be tough. Lost the spelling bee, no worries. Let's see if we can get back to that time though. But Jonathan, your goal is to get better every day, right? Is anybody in here not trying to get better every day? I know I am. I'm still trying to get better every day. Steve, why are you not showing me pictures of your charts? Mine don't want to play along. My Ninja Trader is freaking clogging right now. So I said it at the very beginning. No worries. I'm going to figure this out on mine. Mine's chugging. I'm going to close my crude oil workspace and see if that helps a little bit. I've got so many resources being used on this computer right now because I've got YouTube, I've got Discord, I've got live classes, I've got multiple workspaces, I've got pictures, I've got PowerPoints, I've got spreadsheets. I am taxing this poor little thing, so I'm going to see if we can get that up. Get crude oil closed, and maybe that'll help free up some resources on NinjaTrader 8. Something my brother built, Paul. My brother loves to build computers, so he built me one. It was pretty nice of him. I don't even know what it is. It's stuff that he put together. I think it's got like an awesome stuff. I don't know. I'm such not a tech guy. Steve Diego, I'm gonna get there, brother. I promise. My stuff has kind of seized. So let me kill. Uh-oh. That's not what I wanted to do. Let me kill my NinjaTrader real quick, and I'll just pull it back up so that it's smooth. I'm I'm just going to lose it all together real quick. And then we'll come back to it, and we'll get it. So let me bring that back up real quick. And while I do that, you need a template, Steve. You want to build a new chart is what you want to do, because what you have right now, and I don't know why it's a thing, and I could be wrong, 16 should be enough. But I'm pretty sure that you can't just do it. You need to build a new one, and it doesn't take any time to do. We can build one together if you're unfamiliar. Why do you want the 10-2 instead of the 13-2? Any particular reason? Just to be on board with JN and me? I'm cool with it. I can speak to the 10-2 a lot easier than I can the 13-2. Actually, that's not true. I spent so much time on the 13-2, I can do either. And I feel pretty good about them both. Paul, your laptop, I would add another 8. I wouldn't be afraid to add another 8. It's not hard to do. On board with Sensei. But here's the deal, Steve. I love a redhead. Not everybody does, right? Just because it's my thing, it doesn't have to be your thing. I also like brunettes. I kind of like them all, but you know, you got to be on board with your plan. It's got to be yours. It's got to be what you want to see, what you want to do, what's comfortable to you. And honestly, there's people that I know, one in this room that's been trading a long time and trades really well, that doesn't care for the NASDAQ at all because it moves too fast. And that's okay. Oh, okay, cool. Yeah, 8's pretty low. 16 helps. When I went from 16 to 32 in mine, Paul, I didn't notice a difference. I didn't notice any difference between 16 and 32, but I think you just the resources being used, you'll probably see a pretty big difference between 8 and 16. Almost there, Steve. It's coming. I'll promise. So let's go back to Paul's real quick while those load up. Weak top, absolutely. Best strength you could ever hope for. You let it react to the triggers, Paul, and then it starts to come back down, and then you get no divergence, perfect entry right at the area inside of triggers, stops in the right place, and all of that momentum carries you down. And Paul, I love everything. I love everything about this trade. And this would be one of those times, Paul, where I would wait for the reversal bar, right? Because the triggers are split, the window is big, it is into a mid-band from a bad top. That's where it makes sense. And man, what a great trade. Nicely done. Pretty easy, right? All you need are some rules. That was perfect use of that confirmation bar. And Ron says, with all of that momentum, just a different look. Let me get in on the left side of the triggers. Let me get out at trouble. I love it. Guys, these jump-in trades are not home run trades. These jump-in trades are get-paid trades. These are the, guys, 6 contracts at $100 a pop is a $600 trade. 1 contract is a $100 trade. The only difference between the trade is the number of contracts that you trade. That's it. All right, still loading. We're going to get there. I miss my old computer. And amen, Ron, you have to know the high probability trend trade first, because you have to understand momentum, and you got to be able to recognize that clear path. And there's more to it than just jumping in. Would you agree? There's more to just jumping into the market than just jumping into the market. Guys, I got slaughtered trying to do what Ron did without understanding why Ron does what he does. I can't tell you how many messages I sent him. Dude, where the hell is your stop? Why did you get in here? What were you doing here? And then what he does is he helped me out through annotating in the charts. Don't you guys message Ron. It's not his job to teach you. If you have questions, ask them in the room. Let me take that one. All right, Chris H. You've been so quiet. I'm going to rip into you. You ready? I'm just kidding. Not really. Entered here, large and small triggers above the fibs. Thought I had a clear path to next fib. What got you out of that one, Chris? Is this your entry for this one? I can't tell. Hold on. Because I don't have timestamps. I can't line them up. And you're killing my eyes here. Hold on. This entry is 2675. So that's this one, 2875. Where's this entry? Because that looks freaking perfect. You didn't even let it do anything. Chicken. And then here, not a clear path, not odds favorable. Hold on, let's go look at the entry because we did have the entry. Can you imagine if you just kept your stop outside of the correction point, Chris H? I know you've been in class for a while. You've heard me say that price loves to return to those triggers, right? And that stops need to go about 4 ticks beyond the correction point. Yeah. Would have kept you in this trade and you would have made money all the way up. And then, because you were so busy making money, why the hell did you go short? What made you say, with everything going up, I'm going to go short? Remember that small crowd that we said loves to fight but typically gets their ass kicked? I can't even begin to guess. And notice that you didn't talk about that one. And then you entered here on the pullback. And once again, with the clear path, strong trending, it works out beautifully for you. Oh yeah, done that one. So you were going to jump in long, but jumped in short on accident? And you had your playback going at 50 speed and you reacted about right there. I've done that. Where I play it too fast. I'm like, crap, missed a trade. So what's the lesson here, Chris? The lesson is large chart leads the way. When the large chart says you're going up and the momentum's there, it's probably going up, right? And we make mistakes. And understanding where the market can correct. All of those very basic lessons that we've talked about would have kept you in the trade and getting paid all the way up to the one-to-ones. And then if you take that little momentum style off the one-to-ones, it keeps you in all the way up there to where you got out to. Beautiful exit up there. Love everything about it. Which tells me that you're about 80% of the way there, right? Couple little refinements. Panic comes from not trusting. Trust comes through repetition, Chris. Don't try to force it, right? Don't try to force it. Just repetitions. Write down everything. Write down why you entered here. Write down where your stop should have gone. Write down why you jumped ship. And what you're doing is you're creating something that's studyable. And that's what people don't want to do. It takes a lot of effort to become a solid trader. You got to type a lot, guys. Your fingers are going to hurt. But if you go through that process, you'll be amazed at what you pull off. All right, let's see what we can do, Steve Diego. That'll give you the template. Absolutely. It's me dragging my chart that's killing this thing. I did it again. Let me stretch it back out. I forgot to hold control. Oh my gosh. I did it again. I did it again. Yeah, Steve. So you're going to build a new chart. You're going to apply the 10-2 template to it. Just delete the 13.2 and build the 5. Are you comfortable building charts? I guess that's a question that I should be asking. Ron, have a good one. Why is it opening the Discord app? Oh, I hit the wrong one. Okay, cool, yeah. So the template that I put in there goes to NinjaTrader 8. Templates. Chart. And then I don't believe that you'll even have to reboot Ninja to be able to access it. I don't think you do. Can't do it. No, Chris, you gotta go through the whole 3 minutes of building a new one. Since the 1800s, Steve. In the back of your wagon? Nice one, Jonathan. Perfect. Assuming that's a 13.2. What chart is that? 13.2 or 5.1? $13.2. Awesome, dude. Nice job. I'm killing myself here. My whole computer is seizing up. I'm going to go back to my old computer. That's going to hurt my brother's feelings. I'm going to make him get on here and take a look at it because I'm struggling. What's next, guys? We got a little time to talk. What do you want to talk about? Look at all these things that I have open. A computer? No. Not unless you're donating it. Not unless you're donating it. I got $4 grand worth of good stuff sitting